Hello, welcome to this Crypto Professor analysis video of Ethereum. Ethereum is actually the second largest cryptocurrency by market capitalization. We can see it's currently worth around about 50 billion United States dollars with a daily 24-hour trading volume of around about $10 billion. So it's a huge cryptocurrency by market capitalization. The average trading price of the last 24 hours has been around about 440 US dollars. That's actually a high for 2020, and the price is actually threatening to break higher, which I'll explain a little bit later. In terms of the price structure of all time, we can see that the high price was achieved back in January 2018 of $1,448, and a low price back in 2015, a very early project in terms of cryptocurrency, of 0.43 cents. I actually have a client who I work with who bought 200 Ethereum for £50 or about $75 back in 2015 and was fortunate enough to keep it in the market all the way to January 2018 and sell around this price here. He's since diversified into other projects, but in terms of a return on investment, that is a huge return of over 200,000%. So a very, very well-timed investment there. You can see the chart here with the price action. Prior to 2017, nothing much going on in terms of the price of Ethereum, and then an explosion of the price as the use case for Ethereum gained significant traction. I'm going to talk about the use case for Ethereum because it is very different to the use case for Bitcoin. Obviously, Ether, the cryptocurrency behind the Ethereum network, is a computerized code that you can run applications on, and I'm going to talk a little bit about those later in this video. However, for now, I just want you to notice the difference between Bitcoin and Ethereum. With Bitcoin, obviously, we have 21 million Bitcoin that we will know will exist. That's the smart contract. That is what will actually, that's written into the code of the Bitcoin network. With Ethereum, things are a little bit different. We have 113 million Ethereum currently in circulation and no hard cap. So that means 18 million new Ethereum on average will be created every 12 months until such a point as the Ethereum network, via a vote, decides to stop creating and minting new Bitcoin. It's a proof of work model instead of a proof of stake model. Now, there are plans and plans imminently afoot to launch Ethereum 2.0, which will have a hard fork at some point in the future and a finite limit, probably of around about 140 to 150 million Ethereum. But those plans are still very much in development, and I'll show you a little graph a little bit later about how that process is ongoing. Let's just have a look at the total number of Ethereum in circulation, just to understand a little bit more about the pricing of Ethereum over the past 5 years or so. Back in 2018, when we had that dramatic price spike all the way up to 1,400 US dollars, there are only around about 96 million Ethereum in existence, around about here. Today, there are around about 113 million, so therefore there's more liquidity and there's also a more bearish price action, because obviously the number of Ethereum is affected by the price. If you put £1,000 in, you can buy a certain amount of Ethereum, and that takes up a certain amount of the space within the market. Obviously, doing that earlier in time is more appropriate to own more of the market. Doing it today, you'll own proportionally less of the market because obviously your £1,000 doesn't go as far as it did a few years ago. This is why it was relatively easy for the market to extend all the way up to $1,400. And it's going to be quite difficult this time around for the price to break out. Not that I don't think it's going to happen. It's just going to take a lot more energy and a lot more capital in order to get that price climbing. But I still think it's going to achieve a higher high than the $1,400, as I'll explain a bit later. I talked about my clients a little bit who bought 200 Ether for £50. I wasn't quite as lucky. I didn't get in quite as soon as he did. I bought my first Ethereum back in December 2018. For £81.40 per coin. So significantly higher than he paid for it, but I still think I got a relatively good price considering where it is on this chart. So the 5th of December is where I bought my coins, and it was kind of around this point. So the real low after we saw this huge spike action. I'm still yet to see a significant profit on those. I'm still holding them for the long term, but I'm hoping to sell them out at a price higher than this effectively. So this is a long-term chart of Ethereum. You can see the price spike all the way up here and then a dramatic recovery. Around these prices here, project owners were selling their Ethereum in order to fund their projects. Obviously, the cryptocurrency market was going through a tumultuous bear market around this period. A lot of trading, a lot of speculation going on here. Not so much speculation going on here. We obviously have the dramatic drop of the coronavirus pandemic announcement back in March earlier this year that's happened with every cryptocurrency and every commodity in actual fact, and even the stock market did a similar descent. But since then, a strong trend, a strong growing bullish trend, which I'm currently going to do a little bit of finite analysis on with a chart where we can really zoom in to see what is actually going on. But the important thing to note is since March, in general, prices have been ascending and even ascending quite dramatically at certain periods. Now, the reason for this is that, once again, Ethereum is being adopted. It is being adopted by a multitude of projects, not excluding DeFi. DeFi is the decentralized finance ecosystem where you can lend, borrow, spend, and basically do whatever you like with your cryptocurrency without having to part with it or without having to use an exchange. There are currently 203 different projects using the Ethereum network just for DeFi. If we expand that a little bit further, we can see there are actually 2,992 projects in general just using Ethereum across a whole gamut of different areas. Okay, now what does this do to a computer network? It really does slow it down. Okay, in terms of DeFi, we've actually seen the introduction of over 8 or almost 9 million pounds since we started. 8 million ether. So that's around about 10 to 12 billion dollars this year. Okay, that's been from a rise of around about 60k back in early 2018. So a huge number of users now of Ethereum, both in terms of projects and in terms of DeFi. And what does that do to the price? Well, it actually keeps it fairly low because the fees associated with Ethereum are tied to the price. Okay, and we've seen really, really high fees this year because all that traffic has pushed the price up of the fees, and therefore the price has been suppressed because the number of people able to use the network isn't as high as perhaps it once was because it's so popular. So long term, it's quite a bullish outlook, but short term, it does kind of put a damper on the price. So what do I think the price will be in X number of years? Well, this is a long-term chart of Ether, and this is a fib retracement that you can see in some of my other videos. Basically, you take the high point and the extreme low point of the time period you're looking at, and then these are mathematical lines that you can actually calculate that tell you where a price is likely to end up over a given period. Right now, if I was just buying Ether and leaving it for the long term, I would set my take profit somewhere in the region of $2,400. I think that's very achievable over the next decade or so. I think we will have a lot of trading action on the way there, but at the moment, that's my ultimate price target for Ether within the next 10 years, $2,400. We'll have plenty of pit stops on the way. In particular, the $1,900 region is going to be particularly difficult to get over. But by and large, if someone was to say to me, buy 200 Ether today, cash it out at some point in the future, I would have the 2,400 price tag in mind. So let's look now at why Ether might develop a strong bullish tendency. Okay, Ether is currently going through a process of adaptation to Ether 2.0. We can actually see the process here. Ether 2.0 is where you stake your Ether to get rewards from the network. Remember I said about the proof of work and proof of stake model earlier in this video? The proof of work model is where you help the Ethereum network to mine the transactions using your staked Ether, and you help the computations take place. At the moment, with a proof of work model, only the miners are rewarded for generating new ether. But because of that finite cap that has to come in at some point in the near future in order for the network to grow, we will switch to a proof of stake model in which anyone who owns over 32 ether can actually stake their ether and get a percentage return of around about between 7 and 12% at the moment, it looks like. Currently, though, we're only about 49,000 ether in of a 524,000 ether contract, and this is only phase 0 of a 4-stage process. So it's going to take quite a long time. At the moment, this is estimated to complete phase 0 on the 15th of January 2021. So it's been a very long time coming. In actual fact, it's been about 4 or 5 years of development to expand the Ethereum network and improve it so that more transactions can flow through it. And there is a list of benefits to Ether 2.0 that you can read on cryptocurrencyfacts.com, and you can actually go really in depth on that. But this is a technical analysis video, not a fundamental analysis video. And I just want to show you what I think in the short term is going to happen to the Ethereum price. So we see here, since March, bullish, really bullish trend line, broke out of this descending trend line back in July. We had a huge spike up. We've now hit this resistance level at 460, which actually goes all the way back to May 2018 and November 2017. The next port of call here, if we do break above this, maybe we hit $500, is around the $600 region, which goes all the way back to this previous resistance and support levels in May 2018. So there's a huge long trade here if we break it. Now, I have a couple of reasons to suspect we won't break that in the immediate vicinity. I'm expecting a sell-off of sorts, partly because we're currently on a week chart, very, very overbought. We're pushing the 70 on the RSI, and we should have a capitulation down. If I look at a smaller time frame, like a day, for example, you can see same picture. 4 hour, similar picture. Okay, so there's been a lot of bullish momentum in the markets over the past couple of weeks, which means that it is overdue a sell-off. Ethereum is overdue a sell-off. What might cause that sell-off? Well, we've got this descending triangle wedge here, and we've got this strong support wedge. Now, this is very, very strong indeed. But if we break here, we break this moving average at $390. We break down here to $324. We could theoretically capitulate all the way back down to the mid 200s. And I've even drawn a fib chart for you. If I was looking for a long entry on Ethereum now, I'd be looking to set my entry at 332 US dollars, 294 US dollars, and 240 US dollars. And if we do see a nice capitulation, which bear in mind, Bitcoin has been very strong recently, and Bitcoin can negatively affect the Ethereum price when it decides to climb, because everyone takes their capital out of Ethereum and puts it in Bitcoin. And also Bitcoin is frequently compared with Ethereum. And if Bitcoin is more expensive, it can make Ethereum look inferior. So I wouldn't be buying long here, partly because we're so close to that trend line here. We're actually on the trend line here. If we break above this and maybe settle and find support, then that's a different story entirely. We'll be off to the races. However, whilst we remain underneath this red trend line, I am not looking to buy long. In actual fact, I'm recommending a short-term short with a stop loss around about $480 to $490. But that's only if you're incredibly risk adverse and you're happy to take the risk of losing your capital if we do see the bull market break out. We've also got this curling over the MACD as well, which should indicate a reversal of this trend that we are seeing here. So ultimately, I think that the biggest effect that could have is the volume. Volume is currently all-time high for Ethereum. It's never been higher. It's currently at 13 million. So that is a massive area that theoretically could start to see a sell-off. And if we do see a reduction in the number of volume going through the market, because, for example, Bitcoin decides to take off and decides to steal the show and go to $20,000, as I do believe it might happen over the course of the next couple of weeks, if you look at my other videos, you will see that people will take their capital out of Ethereum, the volume will drop, the price will drop as a result, and we will get our long entries at those aforementioned levels. So to summarize, very, very bullish in the long term, bearish over the short term, but I think by early 2021, we will be hitting the $500 to $600 region for Ethereum, provided we get a nice update with the Ethereum 2.0. If you've enjoyed this video and would like to get $25 of CRO completely for free, please sign up to Crypto.com using our referral link in the description on this video. We also get $25 of CRO to keep this channel operating. The Crypto Professor likes feedback. If you've enjoyed this video, please don't forget to like it. If you'd like more of the same, please don't forget to subscribe. Or if you have questions, please post them in the comments and I'll endeavour to answer them for you. Thanks for watching.